I'm here, Jenny.
Okay, cool. Well, hey, come out and talk to us. So I see the screenshots and I see what you're saying that the candle came into here, but it didn't close, right?
Yes, and I'm sure it's something I just don't understand. So I placed two small trades because I saw where it was going, and I'm just building my accuracy number, whatever. And it definitely hit my TP, but basically I was taken out of the two trades. And it took me out at a stop loss that was well past my limits. It was like an 80 pip stop loss. And I was confused, like, wait a minute, these two trades actually hit my TPs. Why is my account reflecting an 80 pip stop loss? And so they told me something about spreads and slippage. And whenever I put in a trade for a sell, I have to be cognizant of buyers and vice versa. I'm like, but I don't do that. I've never done that. And again, it's maybe it's something I just don't understand because when I place a trade, I just place a trade. I'm not concerned if someone else is putting in a counter trade. So, and then for them to just arbitrarily just make it a 80 pip stop loss. Like you took me out at 80 pips. I'm confused on that and how that whole process works.
Okay, I tried to find a pair that would be pretty wide here between, and this is cool. This is part of the Swiss Army knife. There's other indicators that do the same thing, but they're showing the bid and ask price. That's what this gap is right here. You see this?
Yes.
So back to what I was saying in terms of Hugo's Way, believe it or not, Hugo's Way is one of the better companies. As
Okay.
you guys start trading, and I'm not saying that because I like them, but because I've argued with a lot of brokers, right? And I'm going to try to touch on this gently because too many people lose and then blame the brokers. The brokers do make money off of you winning and losing, and they make money off of you being there. Okay, there's no secret around that. It's a business model. Hello. Having said that, they need you to keep coming back and they need you to keep putting money in to keep making money. So let's consider that too. Now, remember, straight through pricing is not something that most of us have access to, especially not in America. And even the brokers that do have it don't have a lot of leverage. And even that has a pretty wide fluctuation. So this price that we're seeing is plus or minus a lot of pips in the real time. In real, there's lots of powers that be, brokers and liquidity providers that this is all going through. Now, if you, I'm going to mark this up. This is Eurosec. Let me see how I'm going to do this. Actually, I'm going to annotate. I think annotate would be just way smoother. So if you took your sell here, okay, you sold, and you have a take profit here, okay, and this was manual. This wasn't like an automatic anything or like hidden or anything, right? Because like,
Yes, I've actually put in my levels. I put in my TPs and I put in my stop loss.
okay. So remember, the hidden thing does not help you. Well, it does help you in some ways, but it doesn't help you in terms of this particular topic. So let's say you sold here and your stop loss was up here. Okay. Problem is when market opens. Okay. I'm going to use something else. Actually, I'm going to use a yellow. When
I was
market, go
I
ahead.
was wondering what time of day did it happen also.
I put the trades in Monday morning around 10-ish, and it actually hit the TPs around that afternoon, evening, 5, 6, somewhere in.
As far as wondering, I wonder if it's a combination of that and the spread, because when the market closes and reopens, the spread usually opens up a lot. So,
That's super true. So that's what we're getting to. Let's say that price did this. So price is, I'm going to use blue for price. So price is kind of coming along. It came in here and went like this. Okay. Well, because you didn't have a trailing stop, I'm assuming, right?
Right.
So that's price. I'm going to go to yellow. Here's the problem. It's not just session crossover, which is my biggest argument, one of my many, many arguments. It's also news. It's also a random moment where one broker reported something vastly different than another broker. Let me fix that. One liquidity provider reported something vastly different than another liquidity provider, and they all have to line up with supposed straight through pricing, right? So even without news as a catalyst, supposedly, and even without session crossover as a catalyst, supposedly, this spread can look like this. So like by the time you get to here, I'm gonna keep that as blue. Hold on. Let's say at this is the moment. Okay. Let's just put it right there. At that time where it looks like the candles are there, spread may be this big. Okay. And because you're selling, you're getting out on this one, not this one. If you're buying, vice versa, right? So now your spread opened up. You've technically hit your stop loss before you've hit your take profit, technically speaking. So
Oh, there's another point to this too, and that is that let's say if your take profit is sitting right here, the top line that you're seeing right there needs to hit it before that will get triggered. So the price is being drawn with the lower price, but that top price needs to hit in order to exercise the price. So if the spread is up above that, your take profit will never be hit. This is in a sell because when you
Right.
sell, you are always going to sell at the lower price. And when you close your trade, you have to buy it back, which is always going to be at the upper price. So maybe your sell triggers down here. This will happen with ATM if you are using a non-broker stop loss take profit. It can trigger the close, but it actually closes it at the upper price. And at times when the spread is really wide, that can be at a negative. So it can actually close up above your open price if the spread is really wide compared to where your different take profit levels are.
Okay. So, okay. Just trying to understand this.
So that's one issue. Now, you also notice how distance between those two lines is pulsing up and down.
Yes.
What they're talking about, as opposed or as to what paying attention to what the buyers and sellers are doing, they're sort of counter your trade. The buyers are what's pushing those part up in here. If more
Mhm.
buyers come in, it's like the broker, the market is saying, well, if you really want to come in here, maybe you'll come up at this price, and you pull it further away to get people to jump in on those buys at a higher price.
Okay.
And if they're not coming in, they will close down. And if price is moving the opposite direction, you'll see the opposite effect. So it is the counterparties that are making those things pulse further apart and closer together. And during the market reset, there's just nobody trading. So those prices get really, really far away from each other.
So you see, this is the 1 minute on SEC right now. But for example, the candle we see is here. Let me close this. I'm going to minimize. I have a little bit more room and then turn back on to annotate. What you don't see is that you see the candle, the spread could be this big, literally at a certain time when liquidity providers have to catch up pricing with news, with session crossover. The spread, this little white line that you're seeing right now fluctuate, it can literally open up this far. No kidding. Like, to me, this is one of the most unethical practices possible. And because they all have a reason. Now, some of them report their reasons, some of them don't report their reasons. We typically all work under unregulated brokers, and even unfortunately, regulated brokers also have a reason. They just have better documentation for their reasons. Remember, if they need to close a position, so this is get manipulation, broker manipulation specifically talking for a second, technically that broker can open this up this hard. And
They effectively have a knob on the server that they can twist to increase the spread size.
Yeah, and I guess what's confusing, and that makes sense what you're saying. I guess what's confusing me is how could that happen when I've had limits set? So it's like screw your limits. We're going to close you out up here.
Well, the problem is that they can only sell at a price that's being offered. So if you're selling and you need to close your trade, what they guarantee is that if you have your stop loss sitting right here and that upper price touches your stop loss, it will initiate a market order, which says that it will close at whatever the market is sitting at. And if the market is sitting up here, that's where it closes it.
Wow.
And if price suddenly opens up here and your stop loss is down here, that triggers the market order and bang, you're closed. So one of the reasons that Jenny talks about her 1 hour management all the time is
Yeah.
because the widening of the spreads during the market reset are unlikely to impact unless you're really close.
I hope you guys all heard that. So of course I want, and I still do, actually I should pull up some new settings I'm playing with. Of course, I would love to have automatic management on this 1 minute move. Okay. This 1 minute move, I would be a bajillionaire. Like I could do so many great things, amazing things. Like there's news, okay, that is a catalyst, but they also have, and I'm going to use even what you said, buyers and sellers, right? So there's a buyer sitting down here, the order pops down, the spread opens up. There's other catalysts, not just session crossover, that in real time can make this open up this big. Okay. And unfortunately, no man knows the time of day, okay, that this is going to happen. I far too often, especially when you're using a tight situation. So, like if I have a 1.75 ATR, for example, was what I do have in my settings, 1.575 ATR stop loss. For example, this is beating you up. Okay, the spread opens up and it knocks you out before anything, and that's the problem. So
Yeah,
if
and look at these numbers. You know, your ATR is at 44, and the spread right now is half of that. It's over half of it.
I want to find something bigger spread, but and this is an exotic. I don't know why it's being so kind to us right now. It's
Try
irritating.
silver.
Hold on, Leah. I gotta find something better. To give you an idea, this is equal to almost, right? Equal to each other. GN. And remember, this moves. So right now we're in the height of New York. By this afternoon, this is typically higher on almost every pair. Okay. So right now we're in the height of volume. London, and now it's the height of the volume. Okay, so this is the best it is. Okay. And look where we're already sitting. The best that it is, we're already sitting. Like I don't see on NZD is not actually horrible, believe it or not. But some of these pairs, US Mexican, I think has a pretty rough one.
SPX used to be pretty bad, but it's been very good lately.
JPN.
Oh, I got it. Y'all.
I-
Crypto.
Oh yeah, all the cryptos right now.
We got it. We found our good examples. Crypto. Ta-da. Okay. Look at this. It's 3 times. And remember, this is the better heightened part of the market. Okay. So 0.02, this is 3 times as big. So you see how wide that is? And remember,
Mhm.
this goes up 10 times. I mean, in a split second. So it can happen even without our naked eye. So this is cool. But remember, it's only as good as the speed in which your internet, your VPS, your server, your broker, your platform, blah, 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 blah. This can widen faster than your eyes can even see it widen and then come back and snap back. So this one's obviously moving right now, but we saw in the other one it kind of pumping up and down, pumping in and out.
Okay.
This, man, this is my argument. Let me tell you, it happens, and we don't know when. And so to me, of course, I love the idea. Back to what we were saying in terms of type management. If I thought I could manage all of what I wanted to manage without being beat up the way that this does, I totally would. But it's too volatile, and it's too volatile without enough. Again, we can't prove it. We can't track it. Okay. We can't limit or protect ourselves from it. I'm on the wrong screen right now, but let's come over here for a second. This has a cool little feature that will allow us to add the spread in. So I'm going to go to visualize. Let me show you. So do you have ATM? I forget.
No, but I would definitely look into getting it now because I'm concerned about this happening again.
So let's talk about why I do. And I try so hard to explain to people, like, look, you don't have to do it my way. And there are plenty of other ways, but I have a reason behind the madness. So all of these are also helping me. They're helping me, protecting me from all the powers of the market, all the fluctuations. I want to get out of some of this in case something happens, in case by the time I get to that final take profit and the spread opens up, I miss the whole thing and lose the whole trade, right? There's a lot of reasons why I'm doing some of the things that I'm doing, but I digress. Let's adding spread. You can add a multiplier, but now watch on the small time frame. This you're gonna feel it. How am I gonna do this? So right now this is multiplying the spread by 1. So that's moving my stop loss away by 1 spread, right? And my take profits away by 1 spread. That's gonna help in terms of the fee. So it's gonna pay back some of the cost of the trade, but it's also going to increase how much risk I took on that trade just mildly. Let me think what else. It's really digested. The spread gets digested much differently in 1 hour. So even if I'm managing in 1 hour and I say, hey, we're selling this, if you guys have baby management, you guys got beat up. Whereas I got to ride this whole thing down. If we took, for example, this trade, okay, we broke out, we took this trade, we're a little bit late to the party, but we're confident where it's going. Most of you guys got knocked out. So if by the time price gets here, it's session crossover or there was news or FOMC or something, and they just went in and adjusted the account. So it wasn't even like what you saw, that you saw the stop loss hit. They
Mhm.
actually in and you could see it as a withdrawal down here. And I'm like, I didn't look at that on Euro USD, by the way, not on a wild pair. That broker was LQD, the adjustment. And what they did was they calculated where the spread was. And because I have this kick ass, excuse my French, management, okay. Actually, I did have kick butt management in there, but what that was not ATM, but I had everything locked. I had everything I need protected, protected, protected. I was protected from their non-sensory. They came in after the non-sensory and said, well, if this had activated the way it should have, I would. So they adjusted my stuff to give you an idea. So this stuff does help and they do catch it on both sides. All you can do is try to plan your management around it. Back to the conversation I had with one of the developers of MT4. Well, he supposedly worked on MT4 and MT5 a little bit as well. He said this is where most people are losing. We obviously can't argue that. That's a no-brainer. It's a duh. Of course they are. The spread, the slippage, no one's planning for that. No one's managing for that. They're not calculating for that. And it doesn't seem like much, but for somebody, for example, closes out their winners early, the rest of the time they're getting beat up with that spread under their stop loss. Of course their accuracy is like 30%. Of course they're still net negative because these are the things that matter.
Wow. I
Yeah.
didn't know all of this. Thank you.
Just your stops. No, well, don't get discouraged though. You can still be profitable. You just got to learn how to play the game on their field because it is their field.
Yes, I see.